Now is Barbara Duran of BD8 Capital Partners and Charlie Babrinskoy of Ariel Investments. Guys, welcome. Happy Wednesday. Charlie, I mean, investors seem to be trying hard to shrug off yesterday's hot CPI print because we closed near the highs. We did indeed, it looks like, break above 5,000 on the S&P again. So not a great moment for value.
Well, they didn't shrug it off yesterday. In fact, I would argue the market overreacted to yesterday. We had a 1/10 CPI print that was 1/10 too high. There are all kinds of seasonal adjustments that go into that number. And frankly, it came from the way that the government measures inflation, and they overmeasure rents based on what a person could rent their home for. So I would argue there was an overreaction yesterday. What we saw today was that many of those value stocks that you and I talk about have had some pretty good earnings, and when they do, they perform very well. So Resideo, the old Honeywell thermostat company, beat modestly, and the stock was up 20%. We think there's a lot of that in value stocks.
So, Barb, where are you looking at the possibility of making adjustments, and how much of that hinges on PPI or maybe even numbers from big bellwether stocks? I don't even know if you can call NVIDIA a bellwether at this point, but it's influential.
Yeah, no, NVIDIA, I'm not quite sure is a bellwether. It's simply got its own unique characteristics in terms of the AI play. I think when something like yesterday happens, people panic, there's buying opportunities. And for me, it was an opportunity to add to names, some classic names that I hold, like Costco, that was down almost 20 points for no apparent reason. And I think you have to have a broader view. If you're frightened that does mean inflation is picking up, then you want to stay back. And that's certainly what the narrative seemed to be possibly changing to yesterday. But clearly today, it shows that's really people having perspective, because the Fed, does not, it looks at everything, but the PCE is its favored inflation indicator, and that's been at 1.9%. Plus we have the PPI on Friday, and that actually leads the CPI. So for me, I'm not making big adjustments. I still continue to be stock picker here. Yes, the mega cap technology, they have very strong growth characteristics. I think you have to stay with them and buy on any weakness. NVIDIA is running into earnings, and I'm also adding idiosyncratic names. Like I'm actually starting to nibble at Rivian, given the risk reward there and the concerns over EV slowdown, but they have their own separate characteristics that I think make this a good risk reward. Or even starting to add a little bit to Boeing, because that also, as we know, has been trashed, but it is an oligopoly, 9 years of backlog. And I think the risk reward there is attractive. So it's things like that when you get these little sell-offs that you begin to nibble on.
Yeah, Boeing, of course, top U.S. exporter, and you could argue too big to fail, perhaps. Charlie, I want to go back to what we've seen taking place more broadly in the market. And CPI yesterday wasn't the trigger for it, but it helped accelerate it. And it's the fact that the first time this year, we've got markets pricing in just 4 interest rate cuts for 2024. 6 weeks ago, that was 6 interest rate cuts that were being priced in. And perhaps most importantly, the timing of that first rate cut is pushing out in the Fed funds futures market to June. How much does the timing matter, especially when we are talking about value, or we're talking about even some of the more cyclical parts of the market that could become compelling in the midst of rate cuts?
That's a great question, Morgan. And the short answer, it doesn't matter at all. 5 years from now, we're not going to care whether the Fed cut for the first time in April, May, or June. They're going to cut in one of those 3 months, and it's just not going to matter in the long run. In the short run, the market does care, and the market is very efficient. It gets a lot of things right, but the one thing it does wrong is overweight the short term. So sure, if we get a bad piece of news and the Fed decides not to cut until June, fine. Maybe we'll be a little choppy, but that's not going to matter in the long run. The inflation data is getting better. It's going to keep getting better. We're going to get down below 3%. We're not going to get to the 2% target that they have, but they're going to start cutting pretty soon, and it's not going to matter whether it was April, May, or June.